Folks, as you know, another week means more earnings reports, baby. Today, we're looking at Crowdstrike, one that's been a very hot stock in the last year. You look at the performance in the last year of this bad boy, if it wants to load for me. We're talking about a 136% gainer in the last year on this stock. Quite incredible. You see the 5-year chart, obviously. Some pretty incredible stuff. Obviously, seeing as they IPO'd in 2019. Since then, up 236% in a couple years period. Yeah, that's pretty nice. I can't lie to you. So very hot stock. We can't deny it. We'll take a look at these earnings. We see it did shoot up. Initial reaction negative. Then it shot up after hours. And right now, right around really level, if not slightly down. So we'll take a peek at what this company did. I'm expecting good numbers personally. Not looking, I promise you. See, I expected some good numbers out of this bad boy. Estimates seemed a little bit lighter than what I might have expected. So let's open. Okay. That's okay. Quarter one non-GAAP EPS of 10 cents beats by 4 cents, and a GAAP EPS of negative 38 misses by 25. I don't like that line there. I don't. I thought they were pretty loose with their profit guidance here. I thought they would hit that, but it's quite a bad miss. I can't lie to you. Quite disappointing to see that. But again, the company's been working on profitability anyways, and it is one of those businesses that when it reaches that profitability standpoint, it really is an exponential growth from there because of the business model itself. So the revenue line, more of what I would have expected, $302.8 million, up 70% year over year, is a beat by $11 million. Now that's what I'm talking about. I almost expected a little more. I can't lie to you. I know it's lofty, but I was hoping for like a 75%, so I was incorrect on my assumptions here. But overall, it's a good quarter, a good quarterly beat. Just not necessarily on the profitability standpoint, which we'll take a look at what that number equates to. They did achieve an annualized recurring revenue of $1.19 billion, driven by net new recurring revenue of $144 million. They added this quarter in recurring revenue, which is nice. And that's what's really nice about these subscription as a service companies, because these subscriptions that they're able to provide, obviously Crowdstrike offering a service, but what's really nice about this is your customers, they're paying for a full year service. It's not a one-time payment for something where you do a good year with them. You can continue getting revenue every single year instead of a lifetime sale. If you know where I'm coming from there. They added 1,524 net new subscription customers. Pretty nice to see that. Record operating and free cash flow. Pretty nice. Yeah. Quarter two outlook. Take a peek at this bad boy too. Total revenue expected of 318 to 324 versus a consensus of 311. So overall, pretty nice there. You're talking about a good year-over-year growth too. Non-GAAP income operations for 23 to 30 million, and non-GAAP EPS of 7 to 9 cents versus a consensus of 6 cents. So overall, it's a beat in terms of their guidance as well. Not too bad. For the full year, expecting 1.3 billion, 1.34 billion to 1.35 versus a consensus of 1.32. Overall, full year beat now too. You like to see when they up the guidance like that, and the profitability standpoint, the non-GAAP EPS is more of the same. So you like to see a quarter that is, they'll beat and raise guidance. So it's good to see that. But obviously, you see overall, stocks obviously not too happy. It was originally, but overall, seen some negativity since then. But obviously, good stuff. Revenue there. Subscription revenue is up 73%. Obviously, the main core of their business. Not shocked. Huge quote here from the CEO. Nothing too significant, obviously. These quotes are always, well, you know what? This is what we're doing right. I get what you're doing right. And obviously, the guidance listed there. But we'll look at the press release, see if there's anything else new here. I'll zoom in a wee bit for you. We might want to see things. Not everyone can have such pure eyesight as myself, as in 10-inch thick glasses just to be able to see 1 inch in front of my face. But let's take a look and what we're able to see with these numbers here. We saw the revenue line, very nice to see. That compares to 178 million of last year, pretty nice. Subscription revenue 281 compared to 162 of the year prior. Ooh, that's nice. Recurring revenue increased 74% on the year, really nice to see. Subscription gross margin came in at 77%. So again, as you see, once the business grows, because that margin is so high, you're going to see some great numbers. When they outweigh expenses with revenue, it's going to be fantastic for them. It'll be very profitable because these subscription services, they're very good margin on these. GAAP loss came in at $31 million compared to $22 million in the first quarter of last year. So their loss actually widened, which some people will see as a negative thing. I probably would agree. I mean, you're talking about this compares to a pandemic quarter last year where you would expect they would have increased expenses, but it looks like they increased expenses this quarter. Obviously, they expanded revenue by quite a bit, but I would have expected a little bit more out of this GAAP line. I wouldn't expect it to be more than last year, in my opinion. But, yeah, I mean, what can I say? Net loss attributed to Crowdstrike came in at $85 million, concluding $48 million compared to or costs related to intellectual property integration from the Humio accusation. So that makes sense. Acquisition, I don't know, I said accusation. Compared to 19.2 in the first quarter last year. Yeah, I mean, it's rough, you know. It's rough to see that. You'd expect a little bit more out of this company in that GAAP line. But again, as I mentioned, it's one of those where in the future you'll see a hyper-profitable company once they reach that point. But a lot of these companies, which is crazy to me because it's a whole new market. It's how it runs right now. You don't need to be profitable to be a good stock, to be a good company. You don't need it. Just weird for me. It is weird for me. Crowdstrike subscription customers have adopted 4 or more, 5 or more, or 6 or more, come in respectively at 64, 50, and 27. So obviously a lot of modules being used by these customers, so it's good to see. You obviously want to see an increase in the 5 and 6 categories because that means more revenue per customer. So very nice to see that. So other than this is just, announcements. We got announced as this. Yeah, we are this. Forbes magazine said we are in top 10 businesses. We don't much care about those, okay? Now, I get it. Some awards. We won the J.D. Power Award for Best Powertrain, says every single auto manufacturer ever. Let's look at the balance sheet as we like to do. Total current assets. Right, there we go. Coming in at $2.03 billion compared to $2.3 billion of 3 months ago. It's only a 3-month comparison, so nothing significant, but you do see a decrease overall in cash position. Probably went to pay some stuff. 2.8 billion total assets compared to 2.7. So overall, we saw a nice increase there. It looks like some boosts in property as well as goodwill. Some money went to goodwill, it looks like. So they're attributing that in their balance sheet. Nice for them. Current liabilities at 982 compared to 863. That increased as well. Not the most beautiful thing. Total liabilities at 2 billion compared to 1.86 billion. So that's on an increase as well. Total stockholder equity saw a slight decrease, 853 compared to 871. With the miss that they had with the GAAP standpoint, I'm not shocked that this is obviously a decrease in stockholder equity. It's not an awful balance sheet, all things considered. I'd like to see maybe a little bit more on this balance sheet, a little bit larger of a balance sheet personally. But overall, it's not in a bad shape. Not by any means. I just think they could add some assets onto the balance sheet for sure. So, in overall stock valuation, I mean, we're talking about a company trading at a $49 billion market cap nearly, with an annualized income, according to their estimates, which, if it is what it is, 1.3 billion. So compared to that, this is a very expensive stock at these levels. It is. So it just depends on what you're willing to pay for. It's a non-profitable company that is not that it's trading at a very high multiple. Is it worth it? I think that's up to you. Personally, I don't think this is a stock I'm willing to buy. I think in the long term, it's not a bad one. But I think there's better value plays out there right now than a company like Crowdstrike, just because of how much you've seen this stock just take off in the last year. I think it got a little bit too big for its britches, a little too fast. Revenue line is fantastic. The revenue growth in this company is beautiful. But again, I'd like to see a little bit better out of this company in terms of obviously profitability, as well as valuation. Just think the stock needs to be a little bit better valued. But that's what I got for you. Hope you enjoyed.